Um, a trust deed investor, what do they typically do for work? You know, how do they land on this space?
Yeah, there's a wide array that we have. So just kind of thinking of some scenarios, we have a few that maybe have been very successful at business and maybe cashed out of a business and decided that this is a really good place to put a chunk of money and earn a good yield. We have a lot of retirees, you know, people that have, once again, they've kind of made their money. They like getting the yield without feeling they're really putting it at a lot of risk.
And they're not having their principal go down, which is great.
Exactly. I have a friend that actually she's been with me for 20 plus years, and she's taking care of her mother. She's taking care of the money, and this just happened. That's why it's on my mind. But I met with her last week, and she was wondering if she could retire from her job. And it was just amazing to look at it. And I said, yeah, you could retire. I mean, what is your question? You could work 50 hours a week. Or with her retirement, et cetera, you could not work and make the same amount of money.
Exactly.
And the reason being is what you just said. She was able to invest the money and take care of her mother, who's still alive, and interest was paying for all that.
Yes.
So principal was not going down. So if you take a scenario where somebody is, say, eating up $4,000 worth of principal a month to care for a family member, that's a huge difference than maybe breaking even or making a little bit in interest. So it can be a very valuable tool for somebody in that situation.
One of the things that I know you and I like to do is we invest the retirement funds in there, and one of the things that you can do is sort of, you can project what it's going to get to.
Yes.
It's pretty easy. You got a certain yield and you go over time, and that's going to change, and since it's not taxable in that little pool of money, you go and you can project, and it's kind of fun to think that way.
Yeah, it really is, and I would say that's probably the one area that's really exploded over the last, say, a year or two, is we're doing a lot more self-directed type IRAs. There's just a lot of people with that type of money where this makes a lot of sense, as you mentioned, especially since it's tax-free.
I think one of the interesting things is that the client base that we have that invests in trust deeds don't disappear when other things have their day. So you'll have a stock market have a 2,000-point run.
Right.
We don't lose any trust deed investors to that occasion.
We generally don't. I mean, I think that's the most satisfying thing is whenever I'm sitting down with somebody new, I just wish I could say, put them in a time capsule and say, here's how you're going to feel a year from now.
Exactly.
And actually, if this is a problem, usually the problem we have is not only do they want to keep the money invested, but everybody seems to want to bring more money in, which at times, people almost think we can just create whatever money they have, but it's not that way. You only have so many good deals, and actually just people seem to want to invest more and more.
The woman that you mentioned with her mother, is this the one that has the money manager that kind of had warned her like 15 years ago that the yield was too high to watch out, and then eventually, I love the last comment.
Yeah, actually, it's probably been 20 years since we started, and probably after about 10, 12 years, he finally just told her, I don't know what you're doing, but keep doing it. So I guess that was my justification.
We won by submission.
Yes.
But isn't it interesting that he wouldn't really want to figure out what that is? Because one of the things that's happening is we are getting people that are caring for other people's money to look finally at trust deed investing as a viable alternative.
Yeah, we actually do have several wealth managers, financial planners that are starting to find us and get their trust deeds for their clients. So that's another new thing that probably has a lot of legs on it, because just once again, for a lot of people, it's a much safer investment. And the yield, it's interesting regarding yield. You have two groups of people. You have the one group of people that we kind of talked about earlier. Say our rate is 9%. A lot of people, they think they can go out and safely get 15%.
Right.
That's one group, and you're never going to convince them that 9% is that they couldn't do better.
Correct.
But then what's really starting to happen is you have an awful lot of people, and this is really surprising for me because I've dealt with the other group for so long. You have this other group who say, oh, geez, 9%, it must be awful risky.
Including their money managers.
Yeah, Exactly.
Yeah.
And that's the fun part, because we're able to, I invite people in and I just punch the computer that I work off of and I say, this is the entire, as you mentioned, it's about $20 million and it's about 3.5 years we've been doing this 9% program. And I just let them look at how many lates we have. And when they see that, they can't believe it. And it's fun to convince them that you can get 9% and it's not too risky.
Yeah, I think that's in an environment where there's almost no yield without risking principal. We almost have the perfect tool and the perfect time. We've got a borrower that has a chance to buy real estate below replacement costs that cash flows, and no lender that's in the normal world willing to be aggressive and loan them a bunch of money. And on the other side, you have a bunch of people that have saved a bunch of money that can't get yield. And so that's what a broker does right now, is pair those two worlds and make it work. And Aaron, my son, has been involved in the nonprofits, and they have the same dilemma, is that trust deed investing is looked at this alternative world that's kind of it's kind of scary. And I think you're right. It takes time. You know, if you invest in this trust deed and you talk to those people a year from now, we don't have people go, okay, well, I'm not going to do that again. We have people go, well, now you can have a lot more of my stuff.
Right.
And it's because I think it's a lot easier than they thought.
Yeah, it really is. And once again, it's a simple concept. I mean, they're used to buying a house and making a payment. And it's just a matter of, okay, now they lent the money, now they get a payment.
Yeah, you're on the good side of that one.
Exactly. Exactly.
Well, when people say no to trust deed investing, what is the reason typically for that?
Well, once again, I think there's a large portion, since we're kind of involved with a lot of risk, I mean, just the real estate business in general, there's a lot of people that feel like they can take bigger risk or be more in control and make more. So I think that's a large group of people. I think some people, the particular trust deed that we offer is an 8-year trust deed. So occasionally somebody, doesn't want to tie the money up for 8 years. But it just seems like the more they know about it, and we've experienced this over the last 6 months, it just seems like everybody now wants to do it. It's just weird how it's shifted once the information gets out there and they kind of see that, boy, this is going on every month, that they just really buy into what we're doing. Well,
I think it's, you and I would have a very difficult time, if not impossible, selling something we didn't believe in. Yes. So, you and I have money invested in trust deeds, and I really enjoy it, and it's because of its lack of volatility and lack of my participation. And that's the nice part, because I'll be on a trip and I'll actually be at dinner with other people who, if the news is bad, are concerned, rightfully so, about how investments are working for them. Right. And I know that, okay, when I get to my mailbox, I'll be picking up some checks that have matured while I was on the trip.
Exactly.
And that's just a very peaceful feeling to me.
It is, and I think there's one word that I want to get out there. I think passive is a good word.
Passive, yeah. Passive's a very good
now,
word.
Even though you own rentals, you have both.
I know the difference too, by the way.
Yes, absolutely. You know my personality, and me investing, people's funds through work and my own funds in trust deeds doesn't really, it doesn't stress me out at all. I'm totally passive about that. But I know my personality. If I had one rental and that tenant had a problem, that would stress me out more than everything I do at work and all the trust deeds I have on my own. So people have to know their personality. And surprisingly, there's a lot of people that kind of, maybe they're not as extreme as me, but they tend to fit in that passive category. And I think that's one reason why this makes so much sense.
Yeah, I think they have what they think is passive investments until they see the news and they're like, okay, well, I'm not personally active, but I am feeling the brunt of what just happened, and that's what's nice about trustees. It doesn't happen. I have rentals, and in the last month, we had an air conditioning go out on one of the properties. That was $2,400.
Right.
And if I had a trust deed against that property, I would never even have gotten the phone call.
Right.
It just
exactly.
I'd just get my check and things would be okay.
Yeah, somebody else would be fixing the air conditioner.
That's right. Let's talk about the role of the broker in the sense that we're orchestrating this process.
Yes.
And so I guess once again that's very important, because the process, for one, it changes. There's rule changes, law changes and stuff that we're always being updated almost automatedly.
Yeah, we are. Actually, it is the computer program that we use. Any Department of Real Estate regulation, etc., is automatically updated in our program. So we're aware of everything. We know that we're doing all the paperwork correctly. So that's a very big factor in that regards. And then in terms of the protection factor, which I don't know if I'm skipping ahead, but when you're doing a trust deed, there's really there's all the research we do on the borrower. Mm-hmm. There's the trust deed itself, but there's really three items that kind of protect the lender. And one of those is title insurance. And what that does for people that aren't sure, that ensures you that you're in first position on that property.
Okay.
So that's number one, the title insurance in ensuring your position. Number two is we always make sure fire insurance is current and as it should be on the property. And for people that say aren't servicing trust deeds, mm-hmm. I don't think they realize how much goes into that. Because you know from the office how much work we put into keeping the policies current.
Sure.
So that's just something that we do, so it's always current. And then because the loan is an 8-year term, the third aspect of that is, well, what if somebody isn't paying their taxes? Because that's sometimes a question you mm-hmm. get. And we do something that's very simple. We put on what's called a tax service. And what that does is if they become delinquent on their property taxes, we're made aware of that. So with those three things, along with all the groundwork we've done in just choosing the borrower, that kind of packages up, how we protect the investor.
I think one of the broker's responsibilities is to put together a team that is sort of an extension of our own experience. And, out in the field, for instance, you'd mentioned an appraisal.
Yes.
Having an appraiser that's as knowledgeable as ours is, first of all, rare and very important. But he paid us probably the highest compliment anybody could pay us. That he's appraised 14,000 appraisals
right.
for dozens, if not hundreds, of companies, and he said we're the only ones that actually only want to know the truth.
Yeah,
that's a pretty high compliment.
That is a high compliment.
So, our intention is that we are trying to look out for the side, actually both sides. It really does work that way. Because there's every month we get somebody, we tell no to somebody that needs to be told no for their sake as well.
Yeah, I think that's really one of the driving factors. The money lending side, it sounds complicated to some people maybe, but actually that's very easy if you're making the right decisions here.
Yes.
And by making the right decisions for the borrower, and you know this, there's so many people that will call in and I talk to them or we talk to them, and they just shouldn't be buying the property. One reason, maybe they're just not qualified. Mm-hmm. This is going to put them out on a limb. This is kind of the syndrome that some people get into. If I can just make one big score on this property, everything will be okay.
Right, they're playing catch up.
Generally, that person is going to not catch up, they're going to go further in.
Yeah.
And then the second thing is we analyze every deal, because the reason we want to know what the value is, the true value, because we want the guy to make money. We don't want to do a deal just to do a deal. We want this guy to have a successful transaction so then he can do more and keep going. And you want to protect somebody from making a bad investment, because it's not that, property buying, once again, in theory, it's pretty easy. Okay, you find a house at a discount, you buy it, fix it up, sell it for a profit. Well, we know that's not that easy, so we're always a second set of eyes for that person. And a lot of times we talk them out of deals.
Yeah, and you come to the office once a quarter and say, okay, blew another loan, made another client for life. But that's the intent of the business.
Yes.
Is to try to think long term. We're not just to fund a loan. We don't want a loan to fund and then a payment not show up.
Right.
And some of those things are pretty predictable. You've been around the business now for a long time.
Yes.
And you have a very good antenna for those situations. And sometimes it's not obvious. It looks like there's equity. And it looks like everything's okay, but then there's just that third or fifth sense, sixth sense of going,
right.
What? And then sure enough, you dig down and you go, oh.
That's why.
And it's one of those. And I don't think that's replaceable without thousands of loans. You've seen this before, and I think that's what kicks it off as you go, I'm recognizing this type of person or this type of situation, and it's not if we do 10 of those, it's going to be a problem half of the
Yeah,
time.
that's kind of our guy. Yeah, we always talk about that. This is a situation, if we do 10 of them, we're going to have 3 or 4 problems. And you just want to avoid that.